Bitcoin as a network doesn't really allow people to build smart contract. The security of Bitcoin will have how we call this like middle life crisis. The most recent one is actually a multisig hack. 1.5 billion worth of money gets stolen to North Korean, and we want to create a decentralized version, a more secure version to allow users to breach their BTC assets.
So Charlie, thank you so much for your time.
Thank you for having me.
Yeah, appreciate you being here. So I think we can start off with sort of like what everybody's familiar with, that is Bitcoin. And so, you're obviously an industry expert. So maybe you could tell me a little bit about what Bitlayer is, and then we'll sort of get into sort of the current state of the ecosystem and the Bitcoin, where things are.
My name is Charlie, been in this Web3 space almost 10 years now. We built Bitlayer since 2023. It's been 18 months in the journey. Amazing, journeys with all the partners, investors, and the team members. So I think people know what is Bitcoin, right? It's 15 years down the road already. We had so much happen in the last 15 years of history. Bitcoin is the winning assets in terms of as a digital commodity, right? It outperformed pretty much all the asset class in the entire world in the last 4 years. We just recently hit another all-time high. What are we aiming to do as our vision? Bitlayer, we want to build this Bitcoin DeFi infrastructure layer to bring this smart contract and programmability, to Bitcoin. Bitcoin layer one as a network, as a blockchain, doesn't really allow people to build smart contract. You can't really do like Bitcoin lending or all these like DeFi use cases around Bitcoin. So when people saying Bitcoin is digital gold, it's already proven the store of value capability. What do we believe for the future of Bitcoin, especially make it more sustainable, we need to bring the use cases around DeFi for Bitcoiners. So currently, for people who hold Bitcoin, a lot of them actually are paying the custody fee to hold your Bitcoin. What we believe in the future, people who hold the Bitcoin, they are able to get yield by staking other use cases. So I think it's good for the Bitcoiners in the future, and it's good for the Bitcoin as network.
So let's take a step back. And I think you just mentioned that Bitcoin, I think everybody would agree that it's a great store of value, kind of like a digital gold.
Right.
Do you see Bitcoin that way? Right now, what is sort of like the biggest problem with Bitcoin?
Yeah, I have a different opinion. I think Bitcoin could be more than just digital gold. It has a lot of intrinsic important value as a network. So a lot of people value Bitcoin as an asset, right? Bitcoin is here to stay. Bitcoin is programmable, but a very limited programmability, right? You can send your Bitcoin, let's say, to another Bitcoin holder through a wallet. It takes you...
You cannot.
You can. You can, but currently it takes you 10 to 20 minutes. But there's many other use cases, such as lending. You borrow against a Bitcoin to get some use as a collateral to earn, to get some USDT or some stablecoin. You cannot do that. So the limitation of Bitcoin as a network is very, very quite a lot, right? And it's pretty slow, and it's pretty sometimes get pretty congested. So that's kind of the nature of Bitcoin as a current infrastructure. So my view of Bitcoin, especially for the long future, let's say we have another 100, minimum 100 years of Bitcoin journey down the road, we need to have this system which Bitcoin is not just digital gold, meaning nobody actually doing interesting things around it. There's no network transaction happening. Then the miner is having a hard time to maintain the hash rate. The security of Bitcoin will have is this how we call this middle life crisis, meaning that's very few people have the incentives to provide the hash rate to maintain the security. Then Bitcoin have security problem. We call this 51 attack problem. So that's about persistability, right? So we value Bitcoin as the most decentralized, censorship resistant, a little bit pseudo, right? Not controlled by the government type of important digital network. We can build. If we're able to bring this programmability capacity back to Bitcoin, the intrinsic value of Bitcoin as network, now of course, indirectly, Bitcoin as assets will be even more. One, great leaders and thought leader like Michael Saylor saying Bitcoin is going to 30 million US dollar per coin, right? We think intrinsically it shouldn't be rely on financial engineering, right? Like all these like Bitcoin treasury company and all that. It should be rely on fundamental growth as well.
Do you think that the market or sort of the mainstream public sort of share that sentiment, or do you think that the average people are happy to just hold on to it as a store of value and like, you know what, I'm happy as long as the price goes up?
I think price is definitely important as an outcome, right? In terms of the mind share and also in terms of the adoption rate, right? But I think in the long run, there's a lot of existing problem. We call this like free rider problem, because a lot of whale who have been holding Bitcoin with a very low cost of entering, right, many years ago, and during certain periods they all kind of start actually cashing out, right? So I think the adoption in terms of mainstream new users entering Bitcoin needs to have multiple angles, not just the price angle, which is very narrow-minded, right? There's many other assets people can do speculation, and the Bitcoin has way past this like pure speculative kind of asset class, right? It has intrinsic value. It's a sound money, now being adopted by ETF, by institution. Right? We've been working with a few of them, and I think with the future of Bitcoin with DeFi, with the financialization capability, right? I think it's really strong to let people have a meaning, have a reason to hold Bitcoin. Currently, as you said, the majority of the mainstream crypto users looking at only price as the key, indicator about if this thing meaningful or not. There's another way to look at it. If we look at another 15 years down the road of Bitcoin, we need more fundamental value. So we try to bring value from these use cases to Bitcoin. So again, when we say Bitcoin gonna hit $1 million, even all the way like 20, 30 years of $13 million, if we just purely on this price speculation, it's hard to really justify that.
What makes it so different from, say, something like Ethereum? So, for example, why is it still so expensive and inefficient? And is that almost like an inevitable byproduct of the fact that this is like the most decentralized, censorship resistant? In other words, do they go hand in hand? Like, because you have to take the good and the bad.
So I think to answer your question, great question, by the way. A lot of people have probably heard about Ethereum or you use it already, right? Ethereum started from 2014. One of the main founders, Vitalik Buterin, right? He was a writer in the Bitcoin magazine. He is a contributor. He was very young at the time. It was like 18 years old. He had this struggle and also frustration as well. He couldn't really build this programmable use cases around Bitcoin, right? Bitcoin was very focused around all the Bitcoin maxis, the miners. It was very limited, right? It had Bitcoin after 2014. We have multiple like upgradation on the BIP as well. By the time when Ethereum started, it was very limited in terms of use cases. You can barely do anything. So that was kind of the main context of why Ethereum started. If Vitalik, he can do the things in 2014 on Bitcoin, he would not actually found Ethereum, right? So that's the context and history. And the mission of Ethereum is to build this on-chain programmable society, right? Like it's called a world computer, right? It's tooling complete. So it's much more flexible in terms of building things on that ecosystem. Ethereum has been through a lot, right? It had this crazy and interesting DeFi summer in 2020, which brought a lot of adoption in terms of trading things on chain, like with Uniswap, right? Doing lending on Aave in a Compound, doing yield protocol on your Wi-Fi, and many other things, right? It's being one of the most important kind of frontier innovative bet, right? For like a test bed as well. But I think when infrastructure builder like us are empowering Bitcoin now, we could see an interesting conversion. Like the builders from Ethereum world now exploring how to build things on Bitcoin, right? With the interesting extensive experiences they had in the last 7 years. So I think the risk between Bitcoin and Ethereum, as you asked, it's going hand to hand. I think Ethereum also is here to stay. it's pretty robust now in terms of the kind of system anti-fragile, right? With the institution now having this like Ethereum treasury company as well. It also has been approved on the ETF. And so a lot of people have been using Ethereum in daily basis. As you mentioned, it's still congested. That's the reason there's a lot of Ethereum L2s, right? To reduce the gas fee, bring this hyper, scalability, right? To make it faster to transact. Yeah, there's some really sound Ethereum L2s such as Base and Arbitron. Some of them we're partnering via our BVM bridge. I think they are here to stay as well. But if we look at the comparison, the key difference between Bitcoin and Ethereum as ecosystem-wise, not just the assets, right, as a price and whatnot, Bitcoin has been getting close to the $3 trillion market cap. But the network Bitcoin is being very slow, very underutilized. Some certain period, there's no transaction happening in the Bitcoin mempool, meaning there's very little transaction, in the network. In such a high market cap network, people are, sending their Bitcoin to certain another address and so on. And there's no other, utility, right, on Bitcoin. You can only do payment. Whereas Ethereum, it has almost 40% of the Ethereum being put into staking, right? So it's proof of stake now. So the consensus is different. The network usage is pretty high, right? And a lot of TV will be unlocked, right, to do all kinds of liquidity support across different type of DeFi protocols. It has their own problem, but I think if we unlock this massive idle assets of Bitcoin, which is almost getting to 3 trillion, right? If it's just 10%, we're talking about 300 billion assets, can be supported as, important liquidity, assets, right? Now we'll talk about 2x bigger in terms of liquidity level compared to Ethereum. So this is the massive asymmetric potential we're seeing. If Bitcoin become not just digital gold, but also a programmable DeFi, network, right? With this Bitcoin as a sound money, but a new layer of the liquidity assets, we are seeing bigger potential on DeFi. But it's for Bitcoin and for Bitcoiners. So I think it's an interesting kind of a way to look at it. When people already know Ethereum are here to stay, there's a lot of DeFi use cases are already on Ethereum, are pretty battle tested, right? It takes normally a company 3 years to battle test, to proven their product market fit, right? But in Ethereum, there's multiple protocols already 6 or 7 years. So I would say, fairly speaking, some of the major blue chip DeFi protocol Ethereum are pretty battle tested. But imagine now we have this capability to unlock Bitcoin assets, right? Let them be used in those DeFi use cases. Let those DeFi use cases from Ethereum to go multi-chain, to build on Bitcoin, but via our L2 layer. I think that's a very important major kind of another frontier or another value unlock in the Web3 space.
Is it fair to say that, so you got this inspiration from the way you see that people are building on top of Ethereum?
Well, I used to work in Ethereum ecosystem before. I bought my first Ethereum in 2015. I've been talking to a lot of Ethereum key builders since then. I was working with Polkadot, one of the leading infrastructure for interoperability from 2017, the first running investor and an ecosystem contributor. In 2021, I also worked with Polygon, one of the fastest growing L2 in Ethereum. And I still keep good friends with a lot of Ethereum builders across Arbitrum, Base, Optimism. There's a lot of great things Ethereum builders built, right, in the last 7 years, as I said, especially from DeFi. But Ethereum also hits quite a lot of, problems, in terms of liquidity fragmentation. The L2s are, relatively similar to each other, and it's just way too much block space, right? And very little, differentiating, right, between one to the other. And obviously Ethereum, because they changed the consensus, right? There's quite a lot of economic issues they haven't solved. Ethereum, in terms of assets, has been underperformed compared to Bitcoin in the last 3 years. So that's kind of the reality, right? But if we can stand on giant's shoulder, but powering Bitcoin as assets, I think it's a great value unlock, right? So I think that's kind of what we're aiming for. Use the wisdom, the practical knowledge from Ethereum on DeFi, working with some of the best builders already in Ethereum. Let them go multi-chain. Multi-chain is here to stay, right? They can easily build to another chain, but work with us as a Bitcoin alignment, Bitcoin focused infrastructure layer. I think that's kind of the key focus we're working on.
Is it possible for anyone to build on top of sort of Bitcoin layer 1? In 2021, there was the whole Taproot thing.
Yes, that's a great question you
can
mentioned. You
explain.
brought that. So for people who don't know Taproot was a Bitcoin improvement proposal got approved by the Bitcoin miners, the Bitcoin Core in late 2021. And in late 2021, if people remember, it was the last bull cycle, right? NFT was hard, gaming and many other things was hard. Ethereum L2 was really growing, booming, and then until 2022, a series of bad events and bad things happened, and as a pretty catastrophic, right? And then we enter kind of the bear market in the last 3 years. Bitcoin, the Taproot asset upgradation was a very important breakthrough to allow users to create assets on Bitcoin network. That's kind of the essence of Taproot asset. They have this product called an inscription, right? So you can inscribe and creating this derivative assets on the Bitcoin block through the sets. So that was kind of the main foundation as a technical upgradation for like BRC20 or Ordinals, right? It came out early 2023. That was kind of how I get involved with Bitcoin and Orange Pill myself together with many people. But so back to your question, Bitcoin, building things on top of Bitcoin, does it actually open for everybody? Philosophically or principle-wise, yes. Bitcoin is the most permissionless, decentralized network. You can create a lot of things on Bitcoin like under this protocol, right? But you have to pay fees. For certain use cases, it's basically economically not practical, right, to do that. I remember people were paying tens, even hundreds of dollars worth of BTC as gas fee to inscribe certain, BRC20 doing this crazy mint. And obviously, some of the BRC20 had issues with liquidity trading. The UX was pretty bad, and a lot of the assets actually died down after like late 2023. And people stopped kind of talking about it, the hype of Ordinals since last year. There's still some really good ones here to stay, but the majority of them have actually been pretty much kind of dying or dead, right? Nobody actually talk about it actually being used due to the user experience issue and so on. So I think when we talk about aiming to build infrastructure around BTC, right, Bitcoin, we need to look at the landscape of limitation or the caveat. Bitcoin is a UTXO system. So building things around BTC is always kind of a bit clunky, right? It's not necessarily that straightforward compared to the programmable layer like Ethereum or Solana, some others. There's no built-in verification capability. So that's a kind of key difference. Bitcoin as a network, they don't natively verify transactions. So we need to, that's kind of the reason we're using our new technology called BitVM to build this verification component for BTC.
Why doesn't that verification exist? So that was always the case.
Bitcoin as a UTXO cash system, it doesn't really have that. So there's like multiple basic function Ethereum has, but Bitcoin doesn't. Like such as this eclipse curve of verify, transaction with like add, division, multiply, this kind of function. Bitcoin network doesn't really have that, right? So that's kind of the back. If we trace back to the history, Bitcoin has different design choices. There's certain functionality was never being added as like in the main code base. That was part of the history. We can make a lot of speculation why certain core dev in the early days like 2010, 2012 didn't do that. But I think now when we see the demand, right? If we want to really build this DeFi layer on BTC, we need to have that, right? So that's kind of the key components as an infrastructure product Bitlayer is working on. And I think to keep talking about the potential, right? If we have a programmable layer, builders don't need to actually worry about the limitation on BTC on layer 1. We are seeing a very interesting, good user experience. You don't need to worry about the backend. The interface between Bitlayer and the DeFi users is pretty much similar as they deploy their smart contract use cases on Ethereum L1s or L2s.
So it's just as fast.
Yeah, and the same
efficient.
experience of EVM, smart contract programmability. So the whole toolkit, the whole EVM alignment is still the same. So for an engineer who are just like a coder, right, want to deploy a smart contract, we don't require those DeFi use cases builder to learn a new language, to actually rebuild their entire smart contract code base from scratch, which is the case for a few other kind of infrastructure layer around BTC, which is like you need to learn new language. You need to actually understand the whole entire tech stack. And it's actually request the builders to kind of recode like that. And otherwise, it doesn't really compile. They cannot actually understand what does it mean and all the logic. So I think that's kind of the design choices we have, while keeping the most adopted EVM smart contract capability, right? So which can easily onboard a lot of the DeFi blue chip use cases to come over, make it easy on the front end, and we do the heavy lifting work on the verification, on the bridging components with BTC as the backend, right? And I think that's kind of the best design choices we have to onboard really solid DeFi builders and let them provide these sound battle tested DeFi protocols to the retail. No matter it's small retail like the crypto native users or even the new institutional clients who hold BTC. Yeah.
Maybe you could sort of, maybe just flesh out a little bit more the essence of what DeFi is and why that's almost like the perfect first use case for this type of thing, because people might not even like, okay, DeFi.
Yeah, so for people who heard about DeFi or never heard about it, DeFi, not that much yet, DeFi means decentralized finance, right? It's built on the Bitcoin or built on the blockchain network, right? It started from 2020 in Ethereum. So through the smart contract component, the logic of financial such as A sending certain money to B and B sending to C, that as a payment, right? It's built into the network. And there's a lot of interesting innovation on DeFi already in the last 7 years being invented by a lot of smart builders. One of the very famous one is called AMM, automatic market making, right? So through this interesting smart contract way, they can create liquidity pools to support trading, right? To give like trading depths, right? Liquidity when people wants to place the order, right? To trade their one access to the other. So Uniswap is one of the best AMM DEXs, decentralized exchanges, right, to build that. It's almost like a new decentralized version of NASDAQ, right? But it doesn't really require you to go through like a centralized order book or market maker to do that. So it's much more permissionless, much more decentralized. So, and obviously, another very important use case is called lending or borrowing, right? So it's kind of the basic use case in the modern finance, right? When you hold assets and you actually don't want to sell, people wants to find a way to actually earn, some liquidity, right? To do things by putting your assets as a collateral, right? In the traditional finance, it could be your property, your land, your houses, right? Your maybe your cars, other things, which is sound property, right? Sound assets. There's like certain intrinsic value. Obviously, will be viewed by some third party, right, auditor. And once you have that, you have like a conversion rate. Let's say 1 million of the house you borrow against it, you actually earn like, let's say 600,000, worth of cash out, right, to do other certain things. So you use that as a collateral. In the on-chain, Web3 world, it has been also big demand in the early days. People who hold the assets, they actually don't want to just sell. Once it's sold out, you have to buy back, and then obviously speculation, the price can go up. So they want to hedge that while you still hold certain, new liquidity from the, to borrow against it, right? So that was kind of the reason in 2020 and Aave, originally called Ethereum lending, that came out. So people who hold Ethereum who actually don't want to sell, they want to get some USDT, as a stable coin, by borrow against their Ethereum as the collateral, right? So that's kind of the how and why, the on-chain lending protocol started, right? So now there's over 15 billion worth of on-chain assets has been put, as a collateral across many different DeFi lending use cases. There's a lot of demand from the Web3 users to, borrow against it, and lending has become one of the most adopted use cases across the institution as well. There's a lot of like lending desks across all the institutional companies in the Web3 space. We're talking about Galaxy, we're talking about Fidelity, Franklin Templeton, and also major exchanges like Coinbase, Kraken as well. So, I think that's kind of how we see it, right? Trading, decentralized DEXs, lending. Those are the basic 3 pillars of like decentralized finance use cases. And we are seeing all these new frontier of like derivative as use cases, such as you want to trade as a leverage. So leverage trading, but it's decentralized version. So this cycle, I think one of the most interesting use cases is Hyperliquid, right? It's an on-chain decentralized version of a perpetual DEXs, has been traded at like trading volume all-time high at one day is like over 20 billion. So it's a huge volume already. And you don't need to actually require a bank account, right? You can just basically have like Web3 wallets with your assets, can log into those, decentralized version trading desks. And I think it's an interesting new alternative solution. While the world has a lot of countries still are pretty hard for some certain users to open bank account, a lot of countries are still unbanked, right? And you can actually, use that as a way to do trading, do all kinds of payments and all that across the globe in a fairly fast, efficient way. I think this is a important value we are bringing to the entire world, right? As a society, while a lot of people are paying and also have to wait a week to make it like cross-border payments, right? Via like Western Union or something.
Yeah.
So I think that's important. But I think for us, for Bitlayer, when we see the huge potential in DeFi already happening in other ecosystem, what we want to build is to stay on top of that, but empower the Bitcoin liquidity, right? To unlock that, the potential for Bitcoin assets to enter this, DeFi use cases. Let the Bitcoiners to also be able to borrow against their BTC to get some liquidity. Let them actually potentially earn yield by doing certain staking, other kind of interaction. So that's kind of how we want to see and offer the use cases for Bitcoin holders.
Can you explain sort of the fundamental difference between having a side chain, like, you fork it, right?
Yep.
Versus having layer 2.
Right.
And, practically speaking, people have to put the money somewhere.
Yeah.
So in other words, are they putting sort of that money into layer 2, or does it sort of have layer 1? Does it go into layer 1? In other words, like actual Bitcoin, but then there's a way for you to extract that.
So great question. So there's quite a lot of side chains or side system, we call it. And the key difference of our infrastructure compared to the side chains are on the two aspects. One is security. So sidechain security is being maintained by its validator. It's a standalone, separate system, has no security alignment with Bitcoin, right?
So if something happens to that,
so the user's assets cannot really pull out easily back to BTC. So that's kind of the risks, right? People are taking when they actually bridge over to a sidechain, and it's in a consensus in a way. We believe Bitcoin is secure. It's the highest level security network. It has the most decentralized level, right, with across all the miners, everything, and it's proof of work. Sidechain sometimes not necessarily that secure, right? We had some sidechain hacks in the past before in the Web3 history.
I think that's what destroys people's trust, because they get hacked and they lose all their money, right?
Yeah. So there's many different security hacks happened, right, in the past. The most recent one is actually a multisig hack, right? Happened in one of the leading exchange called Bybit. 1.5 billion worth of money get stolen to some famous hacker group. There was some conspiracy theories actually come from North Korean, some hacker groups, and they are pretty crazy what they're doing. So multisig is also another problem. We want to create a decentralized version, a more secure version, to allow users to breach their BTC assets.
So in theory, multisig, to me, it's like requiring multiple signatures. So therefore, it's harder to hack.
Yeah.
But then why does it fail? Like if
it fails because the multiple of the private key holders actually being fooled on the UI, actually as a camouflage by the hacker at the same time.
I see.
So and when the transaction happened, there was no challenge game kind of process as a way to stop the transaction happen. So once the multisig owner proved the transaction, it became finalized. So the transaction cannot stop, and then basically the hacker be able to move out the 1.5 billion worth of assets in one go.
So in other words, that signature holder, multiple of them can be duped by like a different UI.
Yeah. So that was kind of the the reason why Bybit get stolen 1.5 billion worth of liquidity. Yeah.
So in other words, it could happen again. That kind of stuff could happen again.
Yeah. So this is kind of one key infrastructure product we're building, which is called BVM Bridge, right? It allows any security operator in the bridge committee to initiate a challenge game when they see some malicious potential transaction happening. So in that specific multisig hacking Bybit, if we have that system, that transaction can be prevented, it can be stopped. If we have this kind of BVM bridge, like on-chain fraud-proof kind of mechanism.
So they're like a reviewer.
Reviewer, right? They can actually initiate a challenge game to stop things.
Who appoints that reviewer?
So the reviewer system is evolving kind of, decentralized committee. We have the first wave, we onboarded some of the very professional validator kind of programmer kind of companies or top mining pool in the Bitcoin world, such as N pool, F2 pool to join. They have to actually make deposits themselves, and they have the incentives to, from time to time, to monitor the transaction is secure. If they see the transaction is potentially malicious, there's some security issues, they're able to initiate and pay verification fees to initiate the challenge game on the bridge. So that's kind of the way I will see another layer of verification to review, as I said, review the transaction to make sure this is a secure one. It's not being manipulated by potential hacker groups and sending to a wrong address, things like that. So in a nutshell, we call this a new generation Bitcoin bridging solution. Compared to multisig, it's more decentralized, it's more secure. And a multisig approach has been used since 2018 as kind of the bridging solution, utilized by a major wrapped version BTC called WBTC, right? WBTC has been used by quite a lot of the Ethereum use cases, and we believe it's okay right now. But there's some thought that WBTC is now one-to-one packed, harder one-to-one pack anymore, and there's potential risks in the future. So that's kind of why we want to build this new generation, more decentralized version, and that's the version we want to enable more Bitcoiners to feel it's secure, to use it, right? As I said, if the whole system is not secure, people will not actually use that, right? Security is one of the first principle in the Web3 space. So bridging, the bridge product we just launched this month, the BVM bridge, is the key component product. The second product you mentioned, that's the key difference between sidechains and L2. We call this verification component. Sidechain doesn't verify the transaction back to Bitcoin, right? It's settled on the own sidechain. That's what I mentioned. It's sidechain security.
It's its own thing.
Its own thing. It's separate, right? They have the bridge, and once the asset's on the sidechain, it does the transaction or the use case on sidechain, but it's settled on sidechain only. There's no security alignment with BTC, right? If we trust BTC security, but the sidechain is you have to trust the sidechain security. So that's the key difference. Whereas L2, we have this verification process. Transaction happening on our L2, our rollup, eventually through our recursive proof, which is a technical mechanism, and we verify transaction, and eventually settle on the Bitcoin block. With that, we actually at the L2 have to pay certain fees to the miners. So that's another element we call this economic alignment. If we build a very strong L2 DeFi ecosystem with a lot of transactions, where we are able to contribute quite a lot of the security budget fees to the Bitcoin block, to the miners. That's the new revenue stream we're looking forward to provide to the Bitcoiners to contribute back to BTC, right? And it's actually settled on Bitcoin block, so it's Bitcoin security. These are the two key differences. When we say sidechain is already kind of doing the programmable layer, why we need a L2, a true real L2 on BTC. These are the two key differences, right? It's more secure, and it's not economically aligned with BTC holder and with Bitcoin miner, right? And if you're a miner, I don't know for the people who are watching who actually mined BTC before, if you're a Bitcoin miner, you want to make sure your mining activity is profitable, right? To support your miners, your electricity fees and everything, which is pretty expensive now, right? It's also an event of luck requirement, right? Sometimes you just bad luck, you don't actually get chance to mine out your BTC reward. The reality right now for Bitcoin mining business is getting pretty cutthroat, very competitive, right? It's good for the Bitcoin as a network because the hash rate is pretty high, it's very secure. it's very hard for any third parties to hack BTC, right? But if the miners is not getting new revenue stream, and down the road we have multiple rounds of halving, the miners are getting less and less on Bitcoin reward, as mining reward.
But that'll happen eventually, right?
That's exactly, because eventually Bitcoin will be mined out, right? The 21 million will be like getting very, very little in terms of the actual sets, how much they're getting every 20 minutes. We are aiming, our goal is to provide this new revenue stream through this verification components. They can gain certain fees from us as an L2 infrastructure. That's a new revenue stream, and miners can get in benefit, right? So this is very important. The mining engagement with us is also a very important thing to make sure our bridge, BVM bridge, is secure and it's a good experience. So that's the big announcement we made 2 months ago in BTC Las Vegas conference. The top Bitcoin mining pool are joining us on the Bitcoin security operator in our BVM bridge. They will handle and process our bridging transaction, from Bitcoin L1 to L2 and back to L2 to L1. And by doing that, they actually earn certain fees as a new revenue stream. So we want to create this like positive win-win situation, feedback loop, right? And I think that's a very important thing to make the Bitcoin mining more sustainable. Yeah.
So I totally get that for the Bitcoin miners, but for, let's say, average consumers who, let's say, want to buy Bitcoin, so their Bitcoin is secure at the layer 1, right?
So for the layer 2, right? If they want to use our layer 2, buying Bitcoin via centralized exchanges, right, or ETF or on-chain, it's still the same, right? Our use cases is for people already hold Bitcoin, but they want, let's say, they want to do Bitcoin lending. They want to do some on-chain prediction market. You cannot do that on Bitcoin L1, right? But there's a certain yield, certain like benefits you can get, right, by doing that. So compared to sidechain, users use sidechain. It's sidechain security. Once it's essentially get some vulnerability issues, their assets stuck in the sidechain. In our case, it's decentralized bridging, and it's Bitcoin security becomes the settlement. And let's say worst case scenario, there's some vulnerability issue and hacks in our L2 system. The users BTC are able to withdraw back to Bitcoin mainnet in a very smooth way. That's kind of the rollup model we designed, and that's the architect. And that's kind of key difference. It's basically a more decentralized, more secure architect. But while you have the programmability use cases, users can use.
I mean, that to me just sounds like anything that any side chain can offer, or even like Ethereum. So not only you're unlocking something that's much bigger, if you want to make that all like super efficient, programmable, it could probably create our own like consumer apps on top of that. It sounds like almost like a dream. But realistically, it will require obviously mainstream adoption. But do you think that's likely to happen if you just keep going at this pace?
I think there's
what's the biggest challenge?
There's quite a lot of challenges and also limitations down the road, right? Having the Bitcoin security, Bitcoin verification, and then you have the smart contract, capability, right? It sounds amazing, but currently there's still. On the technical side, I think we still need to work on how to, make the user experience really good. And it's still sometimes a bit clunky compared to other more fairly centralized, layer 1 system in terms of trading experiences. There's always a trade-off. While we have a very high level of security and decentralization, but you have you want to make it cheaper, faster processing. It's kind of like we can't really break the physics, right? I think if we compare our hard cost on gas fees, we are slightly higher compared to other L1s, such as Solana and some others.
I see.
So, and that's kind of the fees we have to pay, of course, to the miners and other, to maintain security as well, right?
But to your point, Solana is very centralized.
Exactly.
So
it's very difficult to join as a validator in the Solana network, right? It's a high barrier. So that's that. And I think in terms of use case wise, there's a lot of people haven't realized there's DeFi use cases they can use with their BTC assets, right? So that's the education process we have been doing pretty actively since we launched our V1 mainnet last April. We've done quite a lot of the on-chain kind of engagement or operational campaign as educational tutorial kind of events for Web3 users to let them have a taste about what is Bitcoin DeFi across AMM DEXs on BTC, Bitcoin lending, restaking, real world assets on BTC, Bitcoin prediction market, and all kinds of new primitive, right? We have interesting build on top of us. So as of that kind of events, users can have interesting experience, trying things out. If they try it out, we give some small incentive as almost like a promotion season, right? To let them have a taste. That we reward them as an early adopter. And some of them are here to stay. Some of them maybe leave, but it's okay. And I think that's something we've been doing pretty effectively to grow our ecosystem and bring actual users to those use cases. So it's good for the use case protocols to have some user acquisition, right? And we learn a lot of the UX problem. We push the use case projects to fix that, and we learn a lot how certain nuances about for user flow and asset flow and so on. And also by working with all the Web3 wallets partners, we strengthen our kind of ecosystem map, right? And also the partnership. What other user platform actually have very interesting potential users actually are active on Bitcoin DeFi? So the whole challenge is on finding the right target audience that actually can convert to become the users that actually have the demand, right? To on these use cases they can provide. I wouldn't say everybody will eventually become that use cases target audience. It's always vertical, right? I think our vertical is have high potential to the existing Bitcoin holders or the people who wants to use their Bitcoin, not just perpetually holding. So it's getting larger and larger of percentage-wise within the Bitcoin community. Yeah.
Where are you seeing the fastest adoption? What demographic?
From the beginning of last year, I would say it's mostly Asia communities. The ones from the ordinals community now came to Bitcoin, and then a lot of the DeFi traders community. It's getting more and more westernized now. Obviously, our team are primarily based in Asia. Now, by attending and sponsoring all the Western Bitcoin conference, so on, we went to Europe market, quite a lot in the last couple of months. We went to the United States quite a lot, and also being introduced by some leading investors from US. We've been talking to a lot of the very strong builders from the Europe and from North America. I think the retail user base in the Western community is started picking up. A lot of them start talking about the financialization capability for BTC, with a lot of people actually holding BTC but doing nothing in the last 5, 6, even 10 years. So I think the whole adoption regional-wise is getting broadened, right? Much broadened. I think there's certain area we still haven't unlocked. We have to follow the steps of how BTC adoption evolve. And Bitcoin is globally adopted, right? Being known by pretty much everybody in the world right now, more or less. But a lot of people's knowledge about BTC is fairly narrow or limited. We just need to keep educating, giving them the benefits, showcase the potential, and some of them will try out. And once they try out, we get feedback and we keep improving, and they feel it's interesting, and they became the real users.
Right? I see. What kind of backlash, if any, do you get from, let's say, the Ethereum community or
we're getting backlash from the Bitcoin maxi. So that's actually interesting kind of debate, and sometimes I have my humble diplomatic take on that. First of all,
so these are almost like a Bitcoin purists.
And we call this laser eyes, right? So
what is that?
Some of them laser eyes is just in Twitter they have this
that's all they want. Yeah.
So I think every technology has this kind of the conservative side and also the frontier side. We definitely on the frontier side, right? To unpack more capability, right, for BTC. Whereas people who have seen the backlash, right, I think their statement is basically Bitcoin is here to stay, but people shouldn't do anything with the BTC. We should just hold BTC forever. And we don't care if Bitcoin network and nobody use that. We don't care there's no transaction happening to the mempool. We don't care miners actually have a hard time to incentivize themselves. Let them go, whatever, who cares? But they missing the point. If miners not providing hash rate and nobody use Bitcoin as network, everybody just buying BTC, holding the code custodian or centralized custody, it become a fragile network, right? The hash rate goes lower.
Yeah.
We come back to this like 51 attack problem.
I think this is the interesting point, because people might not even appreciate
Yeah.
what you just said, which is why does it get weaker the longer people just hold it and then do nothing? Like you just said, the 51 problem, if you could just really go into
because if that, as I said, multiple halving down the road, the block reward for the miner is getting less and less, right? And the hash rate, it require a lot of electricity, right? And also the strong mining costs. So if there's no additional reward contributing from other new revenue streams, miners will leave, right? And that's kind of the problem. And I think that it's intrinsically will have more value if people can use Bitcoin as a network, BTC asset being utilized. So the current capital efficiency of the BTC assets has been pretty low. As I said, the assets not being used. It's being stored in the cold wallet doing nothing, right? If we unlock that capability, the network will have more utilization. It's normally how we capture the value, right? Then the intrinsic value of BTC will get higher. So that, I think that's kind of the debate. And on the counterpoint, we can debate that is where we have Bitcoin Maxi saying this and different opinions and backlash. We think it's a liberal market, meaning Bitcoin's future is decided by the community, by the market of demand and supply and real use cases and so on. It's economic decision in the market as a free market, how we see it, right? We have like the invisible hands, right? Like the Adam Smith kind of theory. It's not being decided or manipulated by certain laser eyes. They hold the Bitcoin, they can choose to not do anything. Their statement in Twitter or whatever, maybe have some opinions.
But they can do that because they are probably the whales who's got so much money and anyway that they don't really care, right?
Well, some of them do care actually. We actually supported by some whales. So there's different opinions within the whales as well. But that's the beauty of that. My point was BTC has no CEO. Satoshi Nakamoto as founder, he already went, invisible, right? And then there's no centralized one entity decide the agenda for BTC. So it's a liberal market, meaning different people have different offers, different people have different demand. They find their decentralized way of equilibrium, right? There's certain Bitcoin Maxi think this network should only have their own way. Everybody else who have different opinion against them, they need to wipe them out. It's a very kind of elitism kind of way. Oh, we are the OGs, so everybody have to follow our way. I think Bitcoin get to this level, it has so many new adopters and new users and new buyers now, especially this cycle. It's changed so much already. So the dynamics can also changed. And that's all I see. We view as a very important timing to look in the fresh perspective, not just the maxi, the miner perspective, but also the new user perspective.
Correct me if I'm wrong, but I mean, even the fact that there was the Taproot upgrade back in 2021, so that it makes the transaction appear, regardless of whether it's a DeFi or whatever, it just makes it look like a simple transaction to make it more secure and everything. So to me, that already suggests that like these type of community-led upgrade is sort of slowly gearing itself towards these type of a revolution. Then what do these the elitists say about even that Taproot upgrade?
So first of all, I would say Taproot asset upgradation, right? It's a huge step, right? As I said, without that, we wouldn't have Ordinals protocol. We wouldn't have this BRC20 season 2 years ago, and then eventually it leads to how we can scale BTC, right? In a high security way as a roll-up and not just sidechain. How we can actually use the Bitcoin assets, right, to do certain use cases like DeFi. So it's like evolution, right? It's a gradual evolution within the community, and also it's getting expanded to more and more people getting involved. So it's a very important breakthrough, like in 2021. As I said, that breakthrough required Bitcoin Core, Bitcoin miners, and Bitcoin OGs to approve together. Right. So it's an example already. There's things are happening. There's the changes being made, and I think throughout all the Bitcoin conference we attended since last year, the conversation have been evolved quite a lot as well. I would say, my humble Bitcoin experience from 2013 till now, there's been a lot of Bitcoin OGs and miners have already kind of gradually changed their mind. A lot of them have become much more open-minded. They've been supporting the new frontier innovation. We've been supported by the Bitcoin magazine, Ventures, and also quite a lot of Bitcoin OGs like Dan Held, like major Bitcoin educator, and also the Zappo Bank founder, Vince Suarez. This gentleman probably is the second largest Bitcoin whale in the world, who was the first institution in the Bitcoin industry all the way from 2010. They have been actively supporting, the new frontier like us. And I think it's a strong signal, at a high level signal. Not every Bitcoin OGs are the Bitcoin maxi. Even within the Bitcoin maxi community, they want to see without sacrificing a lot of trade-offs, right? Become like the decentralized network. What we can do next, right? And a lot of them are aware of the fact, multiple halving down the road, will the miners still keep contributing the hash rate for the network? Will the Bitcoin as a network still be sustainable? I think one thing we are clear, if we don't do anything collectively at all, everybody just keeps saying Bitcoin is perfect now, we don't change forever, and that's going to be perfectly fine. There will be no any problems, and the value, in the intrinsic value, will be just keep increasing due to the financial engineering. I don't think that's actually the consensus, right? There's a lot of people think, okay, we need to find a way to improve BTC, and ideally have more Bitcoin people to hold BTC and do things. And the things, there's a different opinions about what exactly the things, right? So I think we want to make sure Bitcoin is sustainable. Mm-hmm. If Bitcoin is not sustainable, it dies 8 years later. It's not the goal we want, right? And it should be a long, sustainable, we call this perpetual gain, right? And it's not people have been saying Bitcoin has been the Ponzi scheme, right? All the way from 2010. And it has so much fragile movement, right? Price went down like 50% within a week and all that. It's very volatile in the early days. Now become more and more stable, right? And very strong liquidity support. And a lot of people have the attention and mind share. It's gonna, keep going strong. Because of the network and have the builders, right? We're supporting that. And as I said, Bitcoin miners is a very key pillar community, right? If the miners are having a hard time to maintain the hash rate, we get serious trouble as a network. So I think that's very important to make sure we work together with the miners and work together with the new users, right? Let the new users get access to the user base, get the miners to have the new revenue stream.
How many miners are there in this world right now?
So there's a decentralized miners. People can still do that with the nodes, kind of with the decentralized way. And they have all the mining pools. Through that you can have a better chance to, earn Bitcoin reward, right? So the mining pool, we're working with 3 top mining pools already. Altogether in the ranking, in the hash rate ranking, there's like over 100 big mining pools. But quite a lot of the strong mining pool are on the top 10.
Right.
Top 10 ones. Yeah.
I see. Do you think that there could be a possibility that when you do introduce these type of new programmable layers and the transactions themselves gets a lot more robust, and then people are really like they start seeing Bitcoin is something else now. Yeah. That could really add to the speculative forces so that it becomes like the price becomes less stable as a result. I think right now the Bitcoin price is getting more and more stable because of the adoption and support, right? But once these changes kick in,
the changes kick in terms of a lot of users have been using Bitcoin network through our L2 infrastructure to do a lot of things, right? The perception of Bitcoin as being a pure speculative, although it's pretty sound kind of assets, to there's a meaningful use case around. I think will change certain dynamics.
So you could actually make it more stable.
Yeah, more stable because a lot of users are using BTC, right? Not just looking at the price every day, right? I think right now, with all the ETF support, right, a lot of institutional support, it's getting to that level. But I think a lot of transactions, a lot of the use cases are still off-chain, are still on a centralized way, right? Imagine bring that on-chain, actually in the Bitcoin L2 and eventually set on BTC in layer 1, make it an on-chain version. The value can be moved, very recurring back to BTC. Will support the BTC price much better. Yeah.
Man, it's almost like it sounds like a dream world, but I guess the question is, like you said, there are quite a few number of challenges, and then how long do you think it'll take?
If we talk about Bitcoin DeFi mass adoption, right, and like have a very strong fundamental shift for the BTC as a network, will take another 2 to 4 years, like to make it really, really big swing. That's why we're early stage. The whole Bitcoin DeFi or Bitcoin L2 infrastructures, the ecosystem is very early stage.
Yeah, sounds very early.
It sounds early, but we get a lot of things done in the last, let's say, 18 months. So like we call this, it's like macro, we have to be patient. It takes time. Micro, we have to be fast. We need to have the speed. We need to have small wins. We need to do a lot of activities. We need to onboard users, builders, and then let them have a try, all this kind of operational stuff. We can't just sit there doing nothing.
How do you onboard all these users? Like, do you right now have a platform?
We have our ecosystem leaderboards. We have, as I mentioned, we have quite a lot of amazing campaigns. We're kicking off the campaign with Binance Wallet, one of the largest, Web3 wallet in the world. Obviously Binance is one of the largest exchanges in the world. I think that's so far the most effective way to onboard users. It's quite different compared to the Web2 kind of user acquisition, growth marketing. Obviously, we need to do a content education, content marketing. But the best conversion we're seeing is start talking to the existing Web3 users who already have MetaMask wallet, with all these like OKX wallet, Binance wallet. Educate these people, because these people already have certain knowledge about how to use wallet, right? We don't start from what is wallet to start with. We educate them about, okay, you know how to use wallet. Here's the tasks, how to bridge the assets, right, to Bitlayer. These are the use cases across the Bitcoin DeFi protocols, and you know how to interact. If you finish the interaction, doing some deposits, some stuff, transactions, and we can verify through this kind of task platform, we give them small incentive as a reward, right? That's kind of the feedback that we're seeing, and we find a way we get to know in an on-chain version what are those users. Those are very small asset holder users, or they are certain like whales. We're able to find it out. At a very nuanced, insightful events, we learn a lot by actually looking at who are the users, how they interact on chain. As I said, when you do a survey in the marketing, right? When you do a survey, you ask them questions. They normally will answer in a way which is maybe not their true answer, but they want them look good and maybe be polite. But if you look at the user behavior, like you just observe them in a quiet place, maybe user behave quite differently. So we want to understand what actually convert and then make people feel interested, and what actually just sounds good but nobody actually want to use it, right?
So what other use cases do you imagine besides DeFi? So for example, even with Ethereum, there was a whole NFT thing, and then it just completely went.
So NFT kind of shifted their energy to Ordinals. Ordinals essentially was like Bitcoin version of NFT, right? But it's on Bitcoin layer 1. It was pretty expensive to trade, pretty bad user experiences. Some of them had a pretty interesting price rally, and the floor price went up a lot, had a strong community. Some are here to stay, some are already like dead or like disappeared. I think the next wave of innovation or frontier in the which can be pretty strong in the Bitcoin L2 ecosystem could be AI agent, but on the payment layer.
Yeah.
So we have the whale, right, doing a lot of the Bitcoin lending or all kind of use cases that require a lot of human verification, human touch, right? Multiple layers to make sure it's secure. That's kind of how we are building the bridge and all that as well. On the other spectrum, we're seeing interesting micro payment kind of thing. Sometimes, and also with all this like small cap trading stuff or on-chain optimization, humans shouldn't be looking at your laptop or monitor or your phone 24/7. Right, so there's a way to authorize like small pool of funds across different wallets and being purely handled by AI agent. So they to do some payment. I think there's certain use cases being pretty interesting, powered by AI agent kind of thing, and I think it will be interesting that those kind of use cases coming on Bitcoin.
I'll be very interested in that, because I've been also hearing how, we are entering into the AI agent era.
Yeah, but it needs to be small amount.
Right.
Be amount is so small. It's like it's literally just $10 that some of the users feel like, okay, if AI agent messed up, there's some bugs.
Exactly.
I'm okay to lose the money.
But it's like you can delegate that task.
You can delegate,
and completely just, okay, fine, you go handle it.
Yeah.
And then we have agent handling transactions with another agent.
Yes.
And then you don't even worry, but then everything you're saying is that could be
automation,
on-chain.
right? It's automation. Like humans should not supposed to look at the monitor 24/7. It just like some of the meme coin trading happened in this cycle in Solana, right? It requires such a crazy attention span, right? You have to look at a monitor, being panicking trading, and sometimes you're just too slow. Human cannot outspeed a lot of the bots, right, and all that. I think it's already a trend we see, but I'm interested to see how AI agent provide value to some micro transactions things on Bitcoin, right? That could be pretty interesting. We're talking a few very early stage kind of use cases around that, but as I said, very early stage.
Yeah.
Early stage. Yeah.
I mean, let's worry about DeFi first.
Yeah.
And then we can go
Exactly.
into agent.
Exactly.
Yeah. So I really like the fact that you're working on something that is what many people would consider to be very early. But then is that how your mind just operates? What makes you sort of like see the future and like, I'm going to go all in on this? I think maybe because of the fact that you're like a former Asia head of Polygon and everything.
Yeah, as I said, right, being in the space deep enough and actually hands-on, right, in the I think like a front row on a lot of things, I've been front row as an observer, right, like with a lot of previous things happen, all these sad things as well, like FTX or all the other crashes in last cycle, and also the crazy peak of NFT and GameFi. I was the front row, like I was a builder, right? I made certain collaboration partnership happen as well. So being in the industry deep enough is very important to give you the insights, the nuances. Oh, I see that happen before, right? And that was part of the history. It's a kind of philosophical way of saying that history sometimes always repeats itself, but in different format, right? And the industry has been changed a lot. And there's a lot of people, including myself, keep saying this cycle of bull cycle, because we are now hitting all-time high, right? I consider we are in the bull market. This cycle is so different. It's so different compared to the previous cycle, but there's some patterns still similar, right?
What makes this bull cycle, assuming it has already started?
Yeah.
When did it start exactly?
I would say the ETF approval was the trigger, right? And then obviously the Bitcoin hit the first all-time high compared to 2021 all-time high was the mental trigger. Okay, now we're back. We're fully back. Start from BTC, right? I think the real altcoin season, everybody kind of go a bit crazy. Like, even like we can kind of make up puns that people getting drunk in the party kind of way. Was Ethereum move back to all-time high, right? Now Ethereum is getting close there, right? It's almost $4,000. It's been quite a struggle last 2 years, right?
Yeah.
So
what makes this bull cycle unique and different from
because of the institutional new clients, right? The new money and the new liquidity come from. If we look at 2021, why Bitcoin or all the assets have, even NFT has such a big rally, certain assets pumped like 100x, even more. Why? It was because of new liquidity, right? It was kind of the COVID period, right? The interest rate was very low. The US government, along with many other governments, was printing money. The money doesn't have right assets to go. A lot of those liquidity enter the BTC, enter the Web3 market, because people were stuck in there at home, right? A lot of people start buying NFT, buying all these things, entering Ethereum and all that. So that was the rally, right? And this cycle, I think some of the retail even haven't come back yet, right? Because there was certain events that make them lose money, and some people already come back. But the new liquidity, which is, we're talking about billions, even tens of billions of level, it's come from the institution. BlackRock itself already contributed 10 billion sheer asset inflow on Bitcoin ETF, right? Altogether, all the ETF assets institution have contributed almost like 15 billion, right? That's amount of money is next level compared to the retail. We are buying, each of them buying like, let's say $5,000, right? On average. So it's like next level what we're talking about. It's being kind of heavily Wall Street driven now, unfortunately. The financial major institution have a bigger pocket, right? Bigger liquidity, asset flow. It's very well known, well adopted. I would never imagine a US government like especially the president, right, actually were being so pro crypto, right? We just get the Genesis Stablecoin Act approved, Clarity approved, and all that, right? Those are the huge deal, because those deal being approved, unless the new government, come out after Donald Trump and actually wipe them out, we have a very strong 2.5 years minimum, right, in the road to have the very sound regulatory clarity on certain things is legal, is legit. You can do that. You wouldn't have trouble, right? In the past, everybody was like trying to do something. You can't size up because the institution, a lot of the banks, all that don't feel it's safe because there's no clarity. The legal clarity together with the sheer new blood pressure, the SF inflow to the BTC, to all these assets, it makes this very unique, right? But on the other side, when we talk about asset flow from ETF, right, it's mostly still on BTC and ETF. It's not on all these small, like minority assets. So I think that's the shift we potentially will see later down the road. Or sadly, it's not actually happen like 2021. It could be just Bitcoin focused, Ethereum second, maybe Solana, maybe not, right? So I think for us, the safe bet is stay close to BTC. Stay close to BTC, earning revenue with BTC, not a denominator, and then make sure betting on BTC as the winning assets. We be the infrastructure empower BTC, not just assets, but other infrastructure.
Wow.
Yeah, that's kind of the reason why we're building things around BTC, right? Not other chains. Yeah.
I see.
Yeah.
And so right now, you mentioned this briefly, but what are the immediate challenges that Bitlayer needs to overcome?
Right.
You mentioned several, but what is like the most immediate challenge to, let's say that even this year, everything goes according to plan?
So I think operationally, practically, we need one or two really killer app, right? Get a lot of users. So that requires education. So education is a challenge, right? Education is a goal, a challenge, right? It's like learning by doing, and we just keep grinding on that, right? Eventually, we'll hit the threshold. It's not something we can be lazy and just trying to be smart. We have to keep grinding. There's no like silver bullets to just easily bypass stuff. After education, after certain killer app, we have a lot of users actually like it. It comes down to have the next level of infrastructure. So that's kind of our V3 vision. We want to provide this parallel execution, high scalability, infrastructure, but have the same level of Bitcoin security with our roll-up model, right? So that's the challenge on the technical layer. There's still trade-off challenges we need to optimize. As I said, building things around BTCs is always some trade-offs. While you want to maintain high-level security, the fees is high, and all kind of things. So I think that's some upgradation we can deliver that require our certain technical breakthrough from our engineering team. We're probably one of the largest engineering tech research team in the Web3 Bitcoin space. Almost 40 engineers, full-time researchers,
Wow.
Globally. Some of them used to work for big company like Huobi, major exchanges. Some used to work for Alibaba. Some are a contributor, key early adopter for leading infrastructure such as Celestia and so on. My co-founder built 3 ZK EVM, ZK rollup before, and 2 EVM compatible chains before. He has very strong experience managing a sound big tech team. All-time high, he was managing 300 people, engineers. So it's a pretty global experienced engineering research team. We have built a lot of things in the past, but building things for BTC, for infrastructure, is a very new frontier, a new territory. Nobody has that much experiences, right? Even all the OG in the Bitcoin space, a lot of them were very just focusing on the L1. A lot of them don't have the experience with ZK, a lot of experience with the new thing as BVM, all that, right? And the BVM as a solution came out from 2023, right? It now has the 3rd generation now. So it's being evolved from BVM 1 to BVM 2, now it's coming BVM 3. So the tech has been evolving, a lot of discussion every week. We are one of the BVM Alliance founding member and a key contributor. This is like the open source community, as all the key builders contributing things over the BVM. Every week we have all the calls. There's like new ideas every day and all that. A lot of high signal, a lot of new thoughts, trying to explore how to optimize it. So how to really make sure this is secure, this is battle tested, and eventually this is something which is very solid for, let's say, the millions of users to use that, it's still the main challenge, right? Education is important. I think I'm pretty confident through our way we can get that done. Use cases is possible, but eventually is deliver the tech which have the ultimate, best design, right? And it really get people use that.
I think that the main skepticism that comes from the public when it comes to all these projects is that they promise a lot. It's like, oh, we're going to deliver the tech and everything. But I think people kind of get jaded because a lot of projects end up either going away or they take the money and run. So it's refreshing for me to always talk to somebody who's quite serious about building and then delivering the tech, right? But what's your sort of take on, so do you feel like there's a lot of like scam projects out there?
I think in the NFT space, there was quite a lot. Yeah, I personally was a user. There was a lot of use cases they were promising to deliver on the NFT side, and there was no utility delivered. That was kind of my experience with all that. For us, I think now I'm coming back to the builder, right? The best way is to deliver, right? I think the deliver start from the product, right? So the V2 mainnet, the BVM Bridge mainnet we launched this month. We had a big announcement covered by all the top media last week. It's already production mode. You can get to our website to check out the bridge, and we have all the well explained documentation already there. And we have 3 security auditing reports by all the best auditing firm. So that's already done, and it's already in production mode. And the next step, as I mentioned, we need to get to the V3 version frontier. And we have our governance token down the road, and many other kind of utility assets, and a major important partnership with Solana, with a few other Web2 brands we are going to announce. I think the best way to really build trust with the community is, one, reward some early adopters some benefits, right? Like let them get an alignment with us. 2, just delivering the things we promise, right? Like on time, ideally. Sometimes it's very hard to deliver things on time. We've been postponing our token launch due to various reasons. The market has been not in our favor, but I think we're getting close to get ready. And I think tech-wise, the V2, since we deliver our V2 on time, we hope to really push to the V3 version fairly soon. But also there are certain things which is out of our control, right? We hope we have all the stronger regulatory clarity, right, on the Bitcoin side. One major unlock from the regulatory side, on policy side, will be SEC approve the Bitcoin ETF staking. Once that is approved, then we can get even big corporate like MicroStrategy, right, like MetaPlanet, all these Bitcoin treasury company to even tap into the Bitcoin DeFi to let them earn the yield with the Bitcoin they actually purchased via the ETF. Right, I think it's a huge unlock for them as well. I personally met Michael Saylor multiple times. So far, without this approval, they actually cannot really do DeFi strategy on top of the Bitcoin holding they have. But once it's approved, it will happen, and they will make it happen. Yeah, so we are in the interesting timing to talk to institutions like them. Once it's approved, then we should be actually on top of the partnership list.
It's mainly the U.S. regulation that's really, with President Trump, just they're opening things up.
Right.
But obviously, you do have a Chinese background. So I think people have this curiosity about what sort of the Chinese government's attitude is towards crypto in general.
Yeah.
Very heavily regulated, I'd imagine.
Yes.
So are you hearing any updates?
The Chinese side, I think it's pretty complicated, but I think the way to understand and not actually making all the conspiracy theory is look at Hong Kong, right? Hong Kong is like the major crypto sandbox for the mainland China. A lot of the builders, a lot of the liquidity now actually on Hong Kong, right? Hong Kong approved the Bitcoin ETF last year.
Okay.
Hong Kong has multiple licensed crypto exchanges and OTC platforms such as Hashkey and OSL, which we know them fairly well.
I don't think many people know this. Do they know this?
A lot of people don't know, right? It's still not that well known, but if you really do some research, you can easily Google or ChatGPT and find out. Those information is public, it's available, it's not like, what do we call this, secret? It's not secret, but it's not that well known, right? Compared to US, you have seen things all over the internet, right? All over the social media. It's just different level. And obviously, if we look at actual number, Hong Kong is fairly small in terms of the trading volume, the ETF by inflow volume, and the just a number of good quality companies in the Web3 space in Hong Kong. It's smaller. It's smaller in size and smaller in quantity. So I think crypto in the mainland China via Hong Kong, that system setup is okay. There's a lot of good people are in Hong Kong. They're still living there and full-time building things in Hong Kong. Hong Kong has multiple pretty strong global conferences this year, like the Consensus Hong Kong, the Web3 Fair Festival, right? And then the upcoming Bitcoin Asia is coming to Hong Kong next month. There's good events there. There's good people are gathering in Hong Kong. But I think if we talk about mainstream adoption of crypto in China via Hong Kong as a sandbox, that vehicle, we don't really see too much happening yet.
I see.
Like we talk about really strong global level, big number institution or like Web3 new protocols innovation happening in Hong Kong. I wouldn't say I'm so disappointed, but I'm just fairly don't really see that much. Yeah. So I think if we talk about no matter it's government support or regulation, eventually comes down to what is the innovation come out of that. Government can interfere, they can support, they can prevent, but if there's nothing really happen on their side as an outcome, then it doesn't really matter, right? You know, I think the whole point of the industry, especially in the tech, it comes down to what are the new product, what are the new service are actually changing the world, right? Provided value. If there's no Apple or Microsoft, Facebook, all these big companies in Silicon Valley wouldn't be Silicon Valley, right? Because those companies are changing the world. Yeah. So I don't really see that much, unfortunately.
So right now, not much is happening in Hong Kong other than...
Not big scale, right? There's small things happening. There's a conference happening. There's people there. But in terms of really global, mainstream, well-known, major innovation breakthrough, not too much.
I see. I think the popular conception is that the Chinese government is very sort of protective of their sovereign sort of like rights, and then they don't want to open it up to the whole world type of thing. So they don't want people just being able to trade crypto, things like that, because they need to sort of keep the money within the country.
I think there's multiple policy already announced since last year. Holding Bitcoin in China is not illegal, right?
It's not illegal.
It's legal, right? You can hold your Bitcoin. The vague part is how is the compliant way to own your Bitcoin.
Right, exactly.
Because on the other side, Bitcoin mining is banned.
Yeah.
It's banned in China, right? A lot of the Bitcoin mining farms have to stop their operation in 2021. September 2021, it was the month they had the announcement.
That to me was like quite puzzling. Why did they ban mining?
Because they realized Bitcoin is global kind of a financial network, right? Government cannot actually easily frozen the Bitcoin wallet account, right? So that's kind of the part they feel they're losing control. And I think there was a certain different analysis about how Bitcoin could be that strategic. On the United States side, especially the Trump administration right now, they think it's a very strategic, very important strategic assets, right? For the future, across the geopolitical landscape and across the kind of financial market landscape, right? Whereas China in 2021, maybe they took the opposite approach. They feel like this is not strategic enough. They have potential risks to our economy, so let's just stop there.
Whereas now they're looking at what the U.S. is doing or the rest of the world is doing.
Yeah.
They're like, oh, is that maybe something we need to like
maybe something we narrow-minded to think is just too negative, right? And I think it's okay let them come back, right? And that will be a very important positive signal, right?
Right. Because it's a huge market. Yeah.
Well, don't forget, 4 years ago, U.S. government was also very anti-crypto.
Yeah.
We have an SEC chairman, right, was very, very anti-crypto, right? And now things changed. Yeah.
Yeah. Wow. And what about Singapore?
Singapore has been an interesting market, right? It's clearly a very major crypto hub in South Asia. I think it's a very important country with a lot of innovators. In the last 6 years, they live in Singapore. They use Singapore as a main office. A lot of the major institutions across like Circle, Coinbase, that have a license, and a lot of the market maker trading team have the office or even the headquarters in Singapore, right? Singapore has been a very important pillar for the Web3 industry, I would say, especially in South Asia, right? It's a main hub, right? People travel to Singapore very regularly to do business there. And there's a lot of very strong, good team, OGs there, like Arthur Hayes, Balaji, and so on. So I think Singapore has played a very important role in the Web3 space. Same as Korea, right? It's maybe different role and different kind of dynamics, but Singapore is important. Regulation-wise, they have this new policy, which make people wants to leave Singapore, right? I think that's a different take with thinking. Singapore wants to take this more compliant approach, right? So there's a few companies don't have the license yet. Yeah. They need to physically leave Singapore and move to more, regulatory, high freedom country like UAE, to do that. But I think there's still large amount of very good companies with the license, with the regulatory clarity. They're going to be still in Singapore. We're talking about companies like Coinbase, right, and Circle and so on. Yeah, we are working with Coinbase on the Coinbase Prime, on the custodian. The Singapore team has a pretty strong, supportive. And I think Singapore is a very small country, by the way, right? For people who have never been there, it's like you can easily meet somebody, visit a company within 20 minutes of drive, right? Yep. So it's fairly convenient. They have the biggest crypto conference probably in the world every year, right? In the late September, early October, Token 2049. And they just announced this year they're still going to be pretty big with a lot of company attending and sponsoring. And we have learned a lot in the Singapore community, talking to the builders, talking to the investors. Oh, wow, I have to still travel around the world, right? I need to spend more and more time actually in the United States, especially in New York, because that's like the center of the crypto right now. And if we talk about the biggest, most important city for the Web3 world industry, I would definitely say New York. Yeah, New York has the highest condensity of crypto builders, founders, and mainstream, major, important institution.
Let's say everything goes according to plan. In 3 years' time, where is Bitcoin going to be at?
Yeah, I think I don't really have the crystal ball. I'm not necessarily the best trader, so I wouldn't really predict a very accurate range on the price.
I mean, you mentioned that it'll reach $13 million.
That's what is said by Michael Saylor. Michael Saylor mentioned that during the Bitcoin Prague event, which was crazy number for me, right? Yeah. I wouldn't think he said that in 20 years, not 3 years.
In 20 years.
In 20 years. So,
assuming that nothing else happens and people just hold it and it'll still reach 13 million.
No, he's assuming a lot of things, like the mainstream government support, and all the like S&P companies start becoming like, Bitcoin treasury company and so on. Like, I see. Trend, right?
But is he taking into account all the use cases and then,
Not yet.
Okay.
He's observing, but as a mainstream publicly listed company, until the SEC Bitcoin ETF approval, he's not taking the official stance on there. Yeah, he said multiple times to me like they have no yield strategy on Bitcoin yet, which is kind of bizarre. They hold so much Bitcoin, they're sitting there doing nothing, right? So I think that's the approval part. I think.
What about your projection?
My projection is Bitcoin gonna have fairly interesting upgradation, potentially upcat, to make the Bitcoin network more expressive with the more use cases. A lot more Bitcoin people will actually try to figure out how to use the Bitcoin doing things. Now it's a very small niche market. It will eventually become a certain percentage. Let's say now it's like less than 2% of the Bitcoiners doing things. Maybe we could have 10x that percentage and even number. So we talk about 20% of the Bitcoiners will actually do things with their Bitcoin across different DeFi, all kinds of use cases on the L2 or the sidechain, different ecosystem, mostly on L2, right? And then institution will come in to explore all this yield on DeFi, right? We're talking about Franklin Templeton, who's our leading investor on Series A. We've been talking to them very actively since last year. Company like 21 Shares, Grayscale, like all the issuers, maybe on the sales side, they're going to endorse some Bitcoin yield-bearing products, facing all the institution clients. I think that's going to happen in the next 3 years. I'm fairly confident. If it's not us, somebody else going to do that.
Yeah,
right?
yeah.
So we want to be the frontier team to actually make that happen. I think there's some interesting use cases will hit mainstream adoption, but it's on Bitcoin network. on the L2 space. I mentioned about AI agent. It could be something else, but I think one way or the other, there's going to be some interesting use cases. Will hit maybe poly market, right? Some kind of level. Like a lot of people talking about. A lot of people use that.
Yeah, I think Polymarket to me is probably the most successful example, like the use case.
Use case since last year, right?
Yeah,
Huge, and obviously the presidential election was also a very interesting event. They could use that. So I think that something like that level potentially will happen in the Bitcoin ecosystem. I'm pretty confident that could happen in the next 3 years. 3 years in crypto is very long. So much things could happen. In the traditional finance world, 3 years maybe like this will be, but in Web3 space, the days are long. We cannot say that. The days are long, the decade is short, right? The last 15 years happened so fast. Right? Bitcoin didn't grow so much, but it was kind of fast. But if we talk about practically next 3 years, a lot of things could happen.
And do we expect it to be a continuous bull market, or do you think you will have many dips?
I think we have dips. Yeah. We have some scary pullbacks. They scare people out. But we are in the uptrend rally. And that uptrend rally will take a while. It's a way longer overall bull market than people thought. But there's going to be scary dips. There's going to be people get shaken out. There's going to be some certain sad stories in terms of things get hacked, things in there. So I think we also still need to be careful in terms of asset management, in terms of trading, and when people go crazy, you need to be sober, right? That kind of stuff. And for builders, these are the 3 years which can really break it or make it, right? That's kind of the key important 3 years and to our company journey. Yeah. So back to the prediction of the price. Right now we sit around 120, right? Like we just hit all-time high, 120. I think we are kind of getting ready to push to the higher range of this cycle, probably getting close to 200. But if there's a major policy came out, we can unlock the further things. I would say even 3 years is a bit hard, but I think later down the road, in the next 10 years, we potentially can really hit $500,000 to 1 million range.
That's crazy.
Yeah. That could be the very interesting price discovery we explore. Yeah. But we need to unlock certain threshold.
Yeah.
Right.
I'm glad you pointed out something that's so obvious in the current world. You put your money in the bank, you expect it to generate some sort of yield, but the fact that people just put their money and there's nothing happening, that to me that is actually the most.
Well, if we take that as an example, right? Let's just deconstruct that.
Yeah.
In a bank, there's a lot of different service department, right? They can offer you all kinds of products, right? Like you can do. There's a lot of mortgage different products, where you have financial products. Like for investment banking, or if you have VIP clients, and they offer you all kinds of things, right? They take different type of risks, but different yield. Yeah. Those are the people actually providing those use cases, right? From the bank, obviously, bank is centralized. In the Bitcoin world right now, there's no that service department. Nobody's building that.
Exactly.
We're building that.
Yeah.
People don't treat Bitcoin as a network, as a bank. People are not requesting. They're actually saying, no, we don't want anything. But there's certain people don't use bank for all these services. But there's certain people, especially in the traditional finance world right now, in the modern finance, there's a lot of people doing all kinds of things.
Of course.
Being offered by all these professionals.
Yeah.
Right? But right now, Bitcoin is not being functioned as a bank with all these sophisticated features. We need to unlock that.
Well, then I think it'll just happen. Especially as it goes up in value.
Yeah.
And people are like, oh my God, it's just so stupid to just make it just lie there.
Yeah, that's why that's the education we need to keep educating.
Wow. Well, thank you so much for educating me and the audience. I think they will really find this, because you speak a lot of common sense and just make it sound so obvious as why that needs to be the future, because it's almost like human nature that we're talking about.
Yeah, but it's still, even with human nature, in the crypto industry, which I've been through in the last 10 years, it takes time. That's why macro, we're very confident. Yeah. Micro, we need to just execute and be fast and just keep on grinding. Yeah. Hopefully anybody who listening, you can try out certain things. Yeah.
Yeah.
Start by trying. Yeah.
Yeah. And where can people find you?
Yeah, so we are very active on Twitter. For people who use Twitter, follow us on Bitlayer Labs. My personal Twitter is Charlie Who Sets. We share all the updates pretty much in daily basis. We have our YouTube channel. It's on Bitlayer Official. There's quite a lot of previous videos, events we had. It's a lot of interesting visuals there. Obviously, for the people who are either developer or actually Web3 users, bitlayer.org is our website. It has all the documentation, white paper, all the current ecosystem leaderboards, and all kind of things there.
Obviously, we don't like personally endorse anything, so I'm not investing in it or anything like that. But to me, it's a very interesting project that just makes a lot of sense. So I mean, whoever wants to check out should definitely check it out.
Thank you very much.
I hope that we can keep up the communication so that you can keep me updated on what's happening.
Absolutely.
Yeah. But thank you so much.
Thank you,
Appreciate your
Steven.
time.
Yeah, awesome.
Yeah.